What's going on, everyone, and welcome back. In today's video, we're breaking down 3 of the cleanest unicorn model setups from this week across NQ and Gold. The goal of this series is not to just show winning trades, but to study the actual delivery behind the setups. And as always, this is purely educational content and not financial advice. Let's get into the first setup. Setup 1. The NQ Bullish Unicorn Reversal. The first setup NQ is a really clean example of how the unicorn model can be used after liquidity purge and displacement shift. Going into the New York session, price had already been trading relatively firm, but then we saw a sharp sell-side liquidity sweep develop right around the 9:30 open. That sweep aggressively pushed below short-term liquidity and also traded beneath the 15-minute swing reference that was sitting underneath price. Now, this is where context becomes important. Instead of continuing lower after the sweep, price immediately started rejecting the lows with strong displacement back to the upside. That displacement is one of the key things the unicorn model is looking for. It's not just identifying random fair value gaps or random retracements, it's specifically identifying moments where liquidity is taken, structure shifts, and aggressive delivery returns in the opposite direction. The model then prints the unicorn zone directly inside that reaccumulation phase after displacement confirms. What makes this setup especially clean is the reaction quality after the entry forms. Price barely spends any time consolidating inside the breaker zone before continuing higher immediately. You can actually see the market transitioning from a defensive recovery into aggressive repricing. From there, NQ continues stair-stepping higher for the remainder of the session, delivering a very strong expansion move. One important thing traders can take away from this example is that the best unicorn setups usually occur after an emotional move. The sweep creates an imbalance, weak positioning gets cleared out, displacement confirms intent, and the retracement into the unicorn zone provides the structured re-entry opportunity. This is exactly the type of sequence the model is designed to isolate automatically. Setup 2. NQ Bearish Unicorn. This second setup is a bearish unicorn continuation setup on the 5-minute time frame, and structurally this is one that's very different from the first example. Instead of a reversal from a liquidity sweep low, this setup develops after price trades into premium and begins showing signs of exhaustion near the highs. You can see the market gradually trending higher throughout the overnight and early morning session, and then price trades into the hourly OHLC reference overhead and starts slowing down. After that, we get a first important clue: displacement lower. The market aggressively rejects the highs and begins delivering strong bearish candles back underneath the short-term range. And that displacement is critical because it confirms that buyers are no longer in control of delivery. Once that shift occurs, the unicorn model identifies the retracement zone inside the bearish imbalance and breaker structure. This is where the setup becomes extremely efficient from an execution standpoint, because instead of chasing the breakdown lower, the model waits for price to trace back into the premium zone where inefficient pricing previously formed. That creates a much cleaner risk-defined bearish entry rather than entering after extension. And once price steps back into the unicorn zone, the continuation lower becomes very aggressive. You can see how the market almost cascades lower with consecutive displacement candles and very shallow pullbacks. That's typically what strong continuation delivery looks like. Another important detail here is how cleanly the retracement respected the unicorn zone before continuation resumed. There wasn't excessive hop chopping or prolonged consolidation inside it. The reaction was immediate, which usually tells you the market has still directional urgency. This is a strong example of the unicorn model, not only for reversals, but also for a continuation structure inside an existing delivery shift. Setup 3. Gold Bullish Unicorn Expansion. This final setup is a bullish unicorn setup on gold, and this one highlights how powerful these models can become during momentum expansion environments. Early in the sequence, gold trades relatively rotationally with no major directional commitment, prices moving back and forth around the equilibrium while slowly building liquidity on both sides. Then we begin seeing the market shift. Price trades lower into the 15-minute OHLC reference and starts forming a local sweep beneath the short-term lows. But instead of accepting lower prices, buyers immediately step back in and deliver strong bullish displacement. That displacement is what changes the state of the market. The unicorn model then identifies the bullish retracement zone right before the expansion phase fully develops. What makes this setup particularly interesting is how explosive the continuation becomes afterwards. Once price leaves the unicorn zone, gold barely retraces again before expanding vertically higher, and this is something traders should pay attention to. Strong unicorn setups often appear right before acceleration phases and not after them. The setup itself forms during the transition between accumulation and expansion, and by the time the move looks obvious to most participants, the optimal entry has already occurred earlier inside the unicorn zone. You can also notice how the move becomes increasingly imbalanced as it progresses higher. Bullish candles start stacking aggressively, and pullbacks become extremely shallow, and delivery remains one-sided. That's exactly the type of behavior traders want to see after a successful uniform formation. Overall, this was a very clean example of a liquidity sweep, displacement, retracement into the inefficiency, and an expansion higher all aligning together in a very structured sequence. So, overall, these were three very strong examples of how the unicorn model can adapt to different market conditions while still following the same core framework. Whether it's a reversal after liquidity gets swept, a continuation, or an expansion move during momentum, the key idea stays the same: liquidity, displacement, retracement, and delivery. And that's really what the model is designed to help visualize automatically. Instead of manually trying to identify every breaker, fair value gap, or liquidity shift in real time, the Unicorn model helps structure those conditions into a cleaner framework for execution. If you enjoyed this breakdown, make sure to leave a like, subscribe, and for future setup reviews and educational content. And let us know in the comments which setup this week was your favorite. Appreciate everyone for watching, and we'll see you in the next one.